Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage. Funny, 8 o'clock in the morning here, Metro Detroit. A little soggy outside.
Well, clearly it's 5 o'clock somewhere.
Becky Alley, Harry Glantz to my right. We'll introduce these real estate guys here.
I think a lot of people had some tequila last night, don't you think?
We're celebrating
early
waking
here. Up not with a headache and listening to us. Maybe we give them some good advice and roll with the day.
That's a great idea. We take your calls here live in the studio and bring in always special great guests today. Some top-notch real estate agents. Bob Greenlaw, how you doing, Bob?
Good, buddy. Thanks
awesome
for having
stuff. Me. Mike Kaczmarczyk, of course.
Doing great.
Guys,
Thanks
sort
for
of
having
our
us.
partners in real estate and stuff. Married guys and out there, of course, working together.
What,
and
is this a dating show? What are you doing?
Not quite, Harry.
Yeah, married.
Bob and Mike.
The
Bob and Mike. The Bob and Mike show.
The Bob and Mike show. It has a good ring to it. Max Broock Real Estate out of the Northville office. Love going in downtown in Northville. Whenever I have closings, I just always love that town. It's really been, just because you guys are down there, one of the best cities, in my opinion, where it just like came out of nowhere like about 20 years ago.
Yeah.
Start developing these downtown areas. Now they knocked down Northville Downs. They're building another 100 or 4,000 homes for you guys to sell. Congratulations. Welcome to the show, too.
Thank you. Thanks for having us.
Great. You guys are off to a good 2026?
So far. Yeah.
All right. We feel like it's been super busy. And Becky, you're always out there doing all sorts of things, ancillary things that promote real estate and mortgages. Just tell us a little bit, because Becky, you went down to this event. It's one of these real producer type events, or it might have been sponsored by someone else, but all these real estate agents go down there and talk about ways to help families.
Yeah, I mean, so it's kind of like one of those moments where like iron sharpens iron a little bit, where, you know, it was they go and they compete, and it's like objection handling, right? And it's kind of just making sure that, like, you know, that your counterparts are, you know, doing their due diligence, right? Because we talk about this often. Who you work with matters. And, you know, and you can see very easily when you have two people going against each other, like who's really worth the salt and who isn't sometimes. And
who's
everyone
prepared? Who's
yes,
more prepared?
correct.
Who's
sure.
really
who's
into
really
it?
boots on the ground? Like
Exactly.
who's doing it every day in, day out?
So, Becky, one of the questions that always comes up, right, is I think I'm going to wait to buy a house. Why should I buy a house now?
I mean, the real answer is you should buy a house when it works for you.
Yeah.
And, you know, people get caught up in the rates and things like that, and they lose sight on the fact that this has been a market that has been transitioning where it's like people talk about the rates because they don't know what else to ask or talk about, but it's like a magician's trick. Like, look over my right hand when the trick's really in my left. What the consumer is missing out is that you should have been focusing on locking in the price point of the home. Period. Yeah. Because the same house that you've been waiting on has been increasing in value over the last actually since 2018, to be honest with you. That's when the market started to shift, but it's been constantly increasing in value. And, you know, the rates went up, you know, because COVID was a fake moment in time. That's true. But like, there's always opportunities to refinance your home and slide down with that lower interest rate. And the other problem was that people overbought during those times, and now they're living off their credit cards. So even though people locked in at 3% interest rate, they were not saying out loud that they forgoed those interest rates about 2 years ago and refinance, because we helped them reset that baseline and pull money out to help with that their overall financial profile.
So waiting costs them, and I'll get these guys involved, Bob and Mike. So it goes something like this. Since 2018, prices of homes have gone up crazy.
Sure.
It's been crazy.
Yeah.
So if you just took an average of 5 to 7%, we know it's been more. Mm-hmm. But if you go at the low, because if it works at the low, for my example, it'll work at a high. So if it's 5% a year for the last 8 years.
8 or 9 years, let's
that's
go.
40%. Now, if you take a look at how home price right now, if a $200,000 house went up 40%, you're paying close to $300,000. That'd be $280,000. Okay, this is the reason why not to wait, because the house that would have cost you then, is now costing you substantially more.
Absolutely, I agree with Becky 100%. Like, you buy a house when you need the house.
Mm-hmm.
Yeah.
What the market rate is and how many houses are available or not available really doesn't matter. You need a house now, facilitate that need now. Don't wait.
Yeah,
because you can refi. Again, I use that exact same advice to everyone we talk to. You can refi in a couple years or a year or whatever. Maybe the rates make huge what if we see another 4% come again? Right? People go crazy. Everyone's going to refi.
Yeah.
I don't think we're going to see that.
I'm just saying, what if?
Not going to happen, right? But it's fun to think about. But the real answer to the question
a lot of fun
is,
to think
You
about.
can never say never,
well,
right?
no. Well, I'm going to say never. I'm going to say never in my lifetime, which hopefully is a long time.
Oh, no.
Yeah.
But it's shorter than yours.
Take it easy
it's
over
okay.
here.
Is that we won't see 4%. I will tell you that. So that
I
even
agree.
tells you that you've got to do it. It's a math equation.
Yeah.
When is it good for you? And if you can afford it, you just do it now. You can't, the whole waiting game on anything. You know, there's that old adage, when's the best time to start? Now. Just start. Okay, just get things going. But it has to make sense financially. And we never want to put anybody into a house. You
Yeah,
guys
and
all
think
play
about
with-
when we were in the recession and all those homes were available. If you think about that now, you could buy homes in Detroit for $1.
We were
and now
on
they're
the
worth
air.
crazy money.
Okay, so we're on the air back in the
Yeah.
day, Becky, Harvey, and I, and we're on, and people are leaving their keys on their counter and just
Yeah, walking
out.
away.
Remember
That was
that, Harvey,
crazy
2007,
time.
8,
Horrible
9?
stuff.
We
Cash for
talked
key,
about-
short sales,
and
all
we
that
talked
bad.
about,
Yeah.
okay, just stick it out. If you could stick it out, it's going to come back.
Absolutely.
The people that stuck it out, which was the majority, okay, they stuck it out and they've become wealthier.
Yes.
And
Yeah.
they've traded up 2 or 3 times on
Absolutely.
real estate because real estate over the long term, real estate's not a short-term play.
No.
No.
Over the long haul, it's one of the best investments you can possibly make.
Yeah, it's definitely a long game. Like I mean, I remember. Okay, so I bought my first house in 2006. Right, we all know what happened in 2007. It was like I did the right thing at the wrong time. Whatever, right?
Doesn't matter.
But I was in the business too. I was just 2 years in the business, and to that Harry's point, I remember people having those conversations, and like, "What are you doing?" Like it didn't make any sense to me. And so it's like you hunkered down. It was supposed to be my 5-year house, ended up being my 15-year house, whatever, right? But it helped me build my real estate portfolio, and it served the need. What was I going to go back and rent or buy someone like a house that someone trashed? Because people were trashing homes. People lost their minds during that time, and I hope we never, as a society, experience that kind of that disdain that was going on during that time. It was just a lot of bad things, and and the professionalism and like mortgage side, like it really held a lot of people accountable. And now like the barrier for entry for to be on the mortgage side, like it is very high. These are well qualified mortgages that we're putting out right now, and the point is that everything that we do is to make sure that someone can afford what they have. And I have I was on the phone yesterday with a first time buyer. They're buying a house in Redford, I believe. And the now taxes are $2,900. These are new first-time buyers, and they're doing down payment assistance. Their money, their payment is tight, right? So we did the calculation of what the future tax is going to be because we're trying to set them up for the future. And I said, okay, everything I'm quoting you is going to be based off $5,000 taxes, not $2,900. Are you okay with this? Are you okay with this? And it got to a point, and then we quoted homeowners insurance because that's a whole other racket right now.
Oh, for sure.
And then we realized that we had to pass on that house because the area was making the homeowners insurance price them out of that price point in the future, because I don't want to take that call in a year and say it's like someone's like, my payment went from $1,600 to $2,300, and we never had that conversation. And that's where you separate the people or the players from the pretenders, is having those real life conversations.
What's also very nice is pulling these buyers back into the market. Boy, that just little 0.5%. So we went from last year and the year before over 7%. Again, those folks are buyers. They set their price of their house, are building all that equity. Now the rates came down. They dipped even into the 5s. Now we're back up a little bit into the low 6 and stuff, but it's pulling a lot of buyers off the sidelines and getting them into housing. And Becky, I like what you said. Redford's been hot lately for some reason. Affordable first-time home. Yeah, it's a nice area and everything, but it's same thing, Beck. Wrong taxes on the listing. We get down to the city and we see that the taxes were $1,800 are not going to be that.
You
in the
have
future.
to talk about the future
down.
tax. You have to. And like the issue is like with buyers, right? If you're out there buying, we understand that like maybe it's a dual household income and only one person qualifies. We understand that maybe the numbers look a little bit tight because you're the only person that's going on the mortgage. I can understand that. But when you are going to be the only individual living in the house and it's already tight, I can't in good conscience not like have a conversation with you to make sure that you can afford that mortgage now and in the future, because the taxes are like that silent little
It's crazy.
assassin that comes up
Hey,
later.
Becky, just to your point, right now, I'm showing everybody on Facebook Live, if you can see it. Got a text this week from a friend of mine in Florida. His daughter bought a house. And the time she bought the house, taxes were $44,500. They just went up to $62,505. And he's saying, what can we do about it?
Yeah.
What can we do? Right.
You know, you bought a house in Florida. You know, there are certain areas of Florida where you're going to read in the paper where the prices are going down, but there are certain areas that they're going up. And
Sure.
it's taxed on the value, what the SEV of the house. And the SEV, the state equalized value, they're going up in certain areas. So that's the tax one. And everybody right here,
Yep.
real life situation, taxes are going up. They're not going down.
And
One
most
of the-
people
go ahead.
forget too that. Sorry, I didn't mean to cut you
No,
off.
go,
But
go.
most people forget that during that recession time, people backed off those SEVs. I mean, the state. I mean, we
Yeah.
lowered taxes,
Yeah.
and most people don't understand. We're really not that high.
No,
If
no.
you- if you
No,
think
it's
about
catching
it,
up.
not
It's
that
catching
had
high.
up.
we not had that
Yeah.
little mess, where would we be today is crazy.
No, that's true.
Like, if you really think about that, the prices that you think they're high now,
Bob,
had we
perfect.
not had that recession, where
sure.
those prices be today would be insane.
Yeah, and we can go down that rabbit hole because
Sure.
it's like you think about it. The mental state is people want the best of both worlds. Like my house isn't worth this. I don't want to pay the taxes. Well, now your house is worth it. Now you're paying the taxes. What do you want?
Wow,
Which one
now
is
I
it?
want to
want them
move
both?
to something I don't have to
Well,
pay the taxes on.
Yeah.
Of course, there was a shock. You're talking about what, 4 or 5% every year? It's going up. So does the tax base. So it's a shocker to people when it raises that fast.
Yeah,
But yeah, they're going to get their money up front, right? Just
Yeah.
like they're gonna make that
But
hit the
Becky,
first time.
to your point, our clients they're forever. Well, we try to make
Yeah.
them forever, right? So looking out for them is the smart play always for us to make them first, not, oh, hey, stretch it. And then in 2 years, I lose my client and you lose your house
Yes.
or
But
you sell with
You
somebody
have
else.
to be transparent.
Yeah.
But Becky and Bob and Harvey, check this out. Last week we talked about it on the air. We have people that aren't like you that don't look out for their clients' best interest.
Well, there's good and
we,
bad.
We had a situation where a house came in low, and instead of presenting it, a realtor presenting it to their buyer that, hey, listen, the value might not be there. Maybe we can go back and negotiate. They went ahead and try and got somebody to rig an appraisal, something that Becky and I and Harvey would never. We didn't do it. We won't do it, and we're not going to do it. They found somebody that could rig the appraisal, and they went ahead and they talked their buyer into buying that house at the price on the rigged appraisal. I use that term.
Like a different lender.
I hate using that term, rig, because I think it's a bad word. But they went to a different lender. They got it done, but they did not. They did not look out for their client's best interest.
All right,
Yeah.
for sure, we're going to look out for you and a whole lot more. Give us a call. We want to hear if you're out there buying a house, thinking about selling. 248-539-9797. It's a hardcore mortgage real estate business show. Keep it here. We'll be right back. Welcome back to the show. We are sponsored by Capital Mortgage Funding. Call us at 1-800-LOW-RATE, the best mortgage banker, powered by CMG Home Loans and MLS 1820 Equal Housing Lender. Special guests, Bob Greenlaw and Mike Kaczmarczyk. Max Broock out there. They call it the Real Estate One office, too. You guys are all mixed in there in Northville. And, of course, you can do all across Southeast Michigan. You guys are great to talk with. Make real estate a lot of fun. If you guys are interested, anyone out there listening, thinking about buying or selling, we love your calls, 248-539-9797. Yeah, rates have dipped down a little bit.
Yeah, let's get into that rate talk a little bit. It's really nothing going on. Since we sat in these chairs last week, they fluctuated maybe 10 basis points.
Yeah.
All right, so in the real world, that means they held steady because what's going on right now is a lot of uncertainty, so things are staying calm. You're talking about a ceasefire, maybe not a ceasefire. You're talking about the Strait of Hormuz. Or the markets react to all those things. So what's it doing to rates? It's keeping rates in the low to mid sixes. Now, when I say that coming out of my mouth, Becky, low to mid sixes, and Grandma Allie will tell you that's a bargain.
Yes, that's definitely a bargain.
Right? Grandma Allie talks to you and she says, low to mid sixes. Are you kidding?
Yeah, really, real estate is always on the talking, on everyone's tip of the tongue. So my grandma will be like, Becky, what's going on? How's business? And what's the rates like? And I'll tell her, and she's like, she's like, they just must be buying houses left and right because that is just so so
mine was
cheap.
13.
Yeah, she's like, mine was 20% and they paid it off and the things, and it's like it's all about perspective.
Sure.
And you can't get caught up in what somebody else did, right? Their journey to home ownership cannot be compared to yours. It can't.
But you use their story to make you do your story, right?
Yes.
So if someone tells you they had a great experience or they bought in a great area and they had, parks and all this other things and all these little things that sometimes you overlook to tell your client too, like, there's a dog park and walking. But these little things make the next person say, well, I want that dream.
Yes.
I want to be part of that.
Bob, I love
interest
your
rates are a
segues
piece
are
of the
great.
cake. Yeah.
One of the things too about home ownership is I always tell families you haven't even met your best friend yet, and that's a true story about home ownership.
Oh, for sure, 100%.
Or your frenemy. It's either your best friend or your frenemy.
But I have met and still stay in touch
even
with
true.
all the different neighbors and all those great relationships. And then, of course, your kids are growing up. And I always tell people, like, your kids are 5 or 6 years old. They haven't even met their best friends yet. Their best friends are in that new subdivision.
Well, you remember all the stories when you were growing up in the neighborhood and you were growing up. You know all those things. Those are the things you keep with you. And every city, every neighborhood has its own story. So when you talk about that, and that's why people do move there. Like you guys are in Northville. Plymouth, Northville's a great area. Huntington Woods, Berkeley. You go down the Woodward corridor. You go to the east side.
We got great cities all over the state.
We're in an area that's built on neighborhoods. Detroit, metropolitan area, Detroit in general, all the neighborhoods that Detroit has, it's all built on neighborhoods. So those stories, and that's why people do move into those areas.
All right, something creeped up on us in the last, I'm going to say about 6 or 7 years. All these cash buyers came out of the woodwork. Son of a gun. I don't know where they're getting the money from, if they're liquidating. But rising home prices, Becky, have definitely push some parents to help the kids. We're getting a lot of that now, helping your kids buy a house. And that's a good strategy here. You're going to go with it too?
No, go. You go with it.
No, I just got some good stuff. But there's gifting, a lot of gifting. And you have to know and consult with your CPA and find out what the tax ramifications are, because there's a lot of ways you can help your kids get into a house. But sometimes they start off with a gift, and then the younger folks, of course, are getting a mortgage. Other times the parents could, if they can't do it that way, sometimes the parents will flat out buy the house for the children,
Good
put
parents.
their name on title, and do all sorts of creative
Sign me up
things.
for that.
That's what we need.
This leads to a lot of conversations, guys, and I hit you guys up with this one. Again, where are all these cash people coming from? But these escalation clauses, because
here we go.
I've got some buyers that no matter what they do, they can't get their offer accepted, and it doesn't matter if it's here in Grand Rapids. And I brought this up a couple weeks ago, and we even heard that they took a $335 offer versus his $355 offer because it's cash. And I just think it's ridiculous. Like, highest and best should always win out. And you should always be presenting that. I don't know of any closing where I've ever gone to where someone walks in with a bag of cash. Even if you do your simple due diligence, Harry, which would be pulling some title insurance. They tried to. Yeah. But just pulling title insurance, the title company typically gets the order. They want a week or so on it. You're facilitating. You have to liquidate your funds. It takes
2
maybe
weeks.
It's 2 weeks. But we get mortgages closed in 3. So what's the difference?
You can get a mortgage closed in
We could do it in 2
10
if we
business
if you
days.
needed
I'm
to.
doing it. I'm running it same as cash, because
There you go.
there was a moment where everyone's portfolio was down. You didn't want to pull the cash out because you're going to lose it. Now it's back up. Cool, right? But I did a same as cash. I was like, if I don't hit this deadline, My buyer can pay cash. He has the assets. But we ran the play. Why does the seller care if he's getting top dollar? We're a reputable company. They felt comfortable with us. We got it done. So I kept that money in this portfolio. We got it done.
Listen,
Like,
we don't know
best for the
why.
client.
We don't know why people accept offers. I mean, there's a lot of things. Maybe it's immediate
price
maybe
and
it's delayed
terms, right?
It's price and terms. But if it's apples to apples, why would you take $335 if you could get $350 and wait another week or 10 days?
Well, it's
I don't understand
the appraisal, right? That's a concern.
Well,
Because if
it's
a house
the
doesn't
agent.
appraise,
It's the
then-
agent.
It's a little bit of both.
Yeah.
Yeah. The agent tells you it's a cash. You don't have to wait. Let's just get this done. But you still wait.
Did you say the magic words? The
Yeah.
agent. So whose best interest are we looking at?
Exactly.
Oh, okay.
So that's like we were saying earlier. It comes down to the principle. Who are you working for when you're in it? Like people complain about our lawsuit that we had with NAR, and I don't, because it defines it even further who you work for,
Yeah.
and it just makes it maybe
Makes
is an
it
extra
more
step
clear.
clear.
Well, like,
yeah.
I agree with that too. Because think about it, like a real, not you particularly, but like real estate agents being afraid to talk about their commissions and what they're making
why?
is like a loan officer being afraid to talk about rate.
Yeah.
Get out of here.
Get out of here.
Like it's
Sure.
ridiculous, but it made them
Sure.
look. Oh, you don't have to pay for me. I'm the buyer's agent. Lies,
That's
Liza
a lie.
Minnelli. Yeah.
like, and that's the whole point, right? So, like, even with the lawsuit, literally made that so that you can't do that because you have to have signatures on documents.
You're disclosing it. You're
Yes,
upfront
right up
and
front.
honesty.
Yes, as if I mean, I always say this as if you didn't know the guy was getting paid. Right,
Of course.
I mean, he's not showing up here to open up doors just because he doesn't
You don't
have
do this
anything
for
to
free?
do. Yeah, right. So, but the fact that now we are disclosing and we're just out there, I think it's great. Now
I
we
think
don't
if you
have to worry
talk
about
to
it.
most realtors, and I'll put you guys on the spot here. I mean, how many realtors are really taking a cut in their commission?
All of us.
Yeah. So you talk to most realtors, and I think that it has affected them.
Absolutely.
And
But our job is
more on
different.
the listing side, I'm going to agree with more so than on the
sides.
buy. Well, on both sides.
both
Okay,
sides.
well, it is
Well,
what it
yeah.
is.
I think more on the buyer side.
Yeah, more on the
Yeah,
buyer
because
side.
you have to ask for your commission.
Oh yeah,
So it's
yeah,
not
yeah.
guaranteed
Now you
anymore
got to
like,
negotiate it.
like it used to be.
Yeah,
I
I'm with
can see
Mike.
that.
I think the buyers are definitely the one that take the hit mostly. Because if I'm on the listing side and we're not reaching price, your commission's going, not mine. Right?
Yeah, it's true.
That's how I'm
Yeah.
going to start because that's my job.
Yep.
And
Well, you're gonna go back to like say you have an accepted offer, value comes in light. Now you're going back to like renegotiating.
Well, you've heard it. I'd be
Yeah.
like, "Hey, Becky, would you take 2.5?" And you'd be like, "Yeah, sure," because I got to get this done for my client. So I don't care. Yeah, I'll do 2.5, Bob.
Yeah.
Or I'll do 1.5. I'll do 1. Whatever the terms are, you agree. If the listing agent comes to you and says, "Hey, I'll take your deal, but you have to do just a little bit less on commission," I don't think there's very many of us who would say no because
Yeah.
you can't.
Well, it's
right?
But then
You're supposed
again-
to
part
do
of the
what's best
offer
for your
now, right?
client.
It's
Yeah.
written right in the offer. You have to say 2.5% goes to the buyer's agent.
Yeah, and
So
I'm
the
going to
buyer
go
knows.
up to bat with for everybody too on this one. But in this industry, we are so quick to give away our money just to get it done for our clients because a lot of us lead with empathy. But at the same time, think about it, like that's like the average person going to work for 40 hours and for like 6, we'll even say 6 months and hoping that one day they get a paycheck. And that's what our consumers don't understand is that you guys are out here day in, day out with clients, even working with them for years. And it doesn't come to fruition until maybe the 5th year, right? And so it's like, I feel like, and that's where I get like empathetic on like the commissions because it's like you guys do earn those paychecks because we're out here hustling,
thank you.
doing things behind the scenes that nobody even sees. You're painting walls, you're fixing the cracks that the FHA repairs are requiring, right? So we do these things behind the scenes that nobody even knows.
Hey, guys, let's go out to our first call this morning. Always great stuff here on the Hardcore Mortgage Real Estate Business Show. 248-539-9797. We're going to go to Sterling Heights and Neil out there. Neil, good morning. Thanks for calling into the show. We got you on the air now.
Good morning. How are you?
Good. What's
Morning.
happening?
So, question. I've been with the same company for 30 years, and we're currently just started the mortgage process. First 20 years, I was an hourly employee. The last 10 years, I've been salary. Back in January, I decided to go back to hourly. My schedule is 2 24-hour shifts. I am being told because it's only since January, they will not use the 8 hours of overtime as income because it has to be with in the last 2 years of overtime. So they're only giving me credit for 40 hours a week.
Okay, so when it comes to income, it depends on like the credit score and what kind of program that you're using. Also, like whether it's conventional or FHA, how an underwriter is going to look at that. Typically, when it does come to overtime, they want to see a 2-year average. Now, if you can, get a letter from your employer that's willing to say, that you're guaranteed XYZ or you're guaranteed a bonus or something like that, then the underwriter will take that into consideration. Our staff is pretty progressive, so I'm not sure who you're using on the lending side. So we can definitely have a conversation with you off air to kind of really look at your financials to see that situation. But that is like the cookie cutter thing is 2 years, but there are exceptions to the rules. If you have been in the same line of work and you've been doing the same thing and you're with the same company
and you're guaranteed the 4 day hours.
And you're guaranteed that's a guarantee, and you're working your 2 24-hour shifts, like that is something that definitely can go for consideration. And I don't really see why they couldn't use that because I actually have something similar like that going on right now.
One of the things we're getting now in documentation is the last year pay stub for 24 and 25. We're using that now to break down your income. So we do income analysis to determine what your monthly income is. Mm-hmm. And again, sometimes getting those 24 and 25 year-to-date pay stub or end of the year pay stubs will show us how much OT you got over time.
So the 2 24-hour shifts, that's your standard workload, correct? Every single week.
Correct.
All right. I know that we can get it done.
We can definitely get that done.
But the problem is 24, 25. I was a salaried employee at 40 hours a week.
But you're with the same company. But as long as you're still W-2.
Same job, same work shift, same everything. And, the fact that we underwrite, process, close, fund our own transactions, that helps.
Yeah, Neil, the truth is that if just because how you're paid is changed, you didn't go from W-2 to 1099. Now that would have been a huge issue, but the fact that you're still W-2 and you're guaranteed these things, this is definitely something that we're going to talk to you about.
Because the consistency factor is the key here.
We're going to call you off there. We're up against our second break of the day here, and it's a great call. Again, if you have issues like this, you got to deal with a real lender. I mean, Harry, it's 40 some years. 35 for me. Becky's like, I don't know.
22 now.
That's it.
Becky. Start going backwards.
Sound like you've been doing this your whole freaking life, Becky.
You're
great.
Actually.
All right, we're here to help you. If you need a mortgage, call Capital Mortgage Funding 1-800-LOW-RATE, the best mortgage banker. Here on the show, 248-539-9797. We'll be right back. All right, welcome back to the show, 831. If you're just joining us, the Hardcore Mortgage Real Estate Business Show in our 26th year, giving you some great information about mortgages and real estate. Got some great guys in here. Bob and Mike, of course, from the Max Broock office. And if you guys want to get in touch with us, you're thinking about buying or selling a house, call in the studio, 248-539-9797. Always Becky Haley, Harry Glanz. I'm Harvey Freed. Let's roll off to Chris in Northville. Good morning, Chris. Thanks for the call. Go ahead.
Good morning, guys. Great show. Very entertaining. I got a question about some trends in residential real estate, and more specifically, the population trend. So here in Metro Detroit, I get the sense that there's still a intense competition in popular suburbs like Northville.
Yeah.
But my question is, how is the current population trend affecting, the local inventory? Are builders finding it difficult to keep up with the demand? Are they focusing on, multi-tenant facilities, or is the suburban development still real popular? Any thoughts?
I have some on that. You guys want to jump in, guys?
Absolutely. Go ahead. Well, anyway, so inventory levels are down, obviously in the area. So finding your home and the right home is going to be difficult now. But as far as what you were saying, as far as trends of population, so particularly when you find areas that are a lot of new construction, your infrastructure and all that stuff that was around your other homes is not adequate. So you start to feel even more pressure about the less inventory. So the buyers going to builders and filling that out is great, but it will change the outer rim of the stuff. If I think that's what you were asking, yes?
Yeah.
So, because here's the situation, the population. The baby boomers were the dominant populace for a very long time. Now the millennials are going to overtake the baby boomers. Where are the millennials going to move? They're going to move into the baby boomers' houses. The problem is the boomers aren't moving out of their houses fast enough for the millennials to come in our area. So metropolitan Detroit is now you're seeing an inventory shortage, and you could go up and down the Woodward corridor. You can go to the east side, you can go to the west side, you can go downriver. And the quality of homes coming on the market is less because people are staying still. So baby boomers, if you were born 1944, 45 through 1964, that's the baby boomers. We're not moving out. We're sticking, we're sticking and staying.
No, because you're the ones that took that 3% mortgage.
Because
now.
We've got a 2.5% to 4.5% mortgage, and we don't want to leave and go in the old folks' home yet.
Yeah.
So therefore, the millennials they're having to wait a little bit, and that's why it's imperative. If you can find a house now, you got to go ahead and get it because the inventory is so low now.
Yeah.
And that's why the builders too, they can't build them fast enough right now. They really can't.
They really can't.
And
but they're not even they're not selling as great either.
No,
and that's
true.
the other thing. It's kind of like a weird,
it's a weird market. It's like a
weird
buyer seller
Yes.
market,
Yes,
but it's
I
really
agree.
on paper. It's for sure a seller's market with the lack of
100%.
inventory, but buyers are winning right now.
if you have that house that you said it, if it's ready to go, it's mint, it's clean,
it'll go.
Carpets are updated, cabinets look great, nothing's busted. It goes multiple offers, over asking, all that stuff, right?
And thanks for the call, Chris. It's a great call always. And what's going on in the local neighborhoods? We'll keep the calls rolling here this morning, 248-539-9797. As we always talk about home affordability, this younger generation, things got pretty pricey on them. Also, they graduated. They got some student loans out there. There's some other pitfalls. But, Becky, on the other side of that is rents are through the roof. And smart folks recognize that if we're going to throw our money away at rent, if my folks can help me a little bit, I can build this equity up. And like you said, Becky, your 5-year house turned into your 50-year-old
it's
home.
whatever. And I think I say this every Saturday: park your car in your own driveway versus somebody else's, and then you go buy another rental.
You
right?
can do that.
You set yourself up for success.
All right, 8:35 this morning. We want to hear from you. 248-539-9797. We've got Tom calling in from Los Angeles, California. Hey, Tom, what's your question?
Oh, that's early.
Can you hear me okay? Sorry.
Loud and clear, Tom. We can hear you.
Hey, here's the thing. I'm thinking about relocating at the end of the year, and Michigan's one of the options.
Love it.
Welcome.
Well, you guys. Well, hold on. Let's not get too crazy. This winter was pretty bad because I listened to the sports talk during the week, and all I did was complain about the weather.
Tom, it was brutal, but I didn't say that. Go ahead.
Weather was brutal. We know.
Okay. But here's my thing. I'm coming back to Michigan in May for my annual visit, Is it too early to start looking for places in Michigan? Just take a quick look at something, or should I just put it off till I'm actually going to make the decision?
It's never too early. We were talking about the inventory being so low. It just takes time to find a house in this market. So the more time you give yourself, the better chance you're going to have.
Yeah. So you're saying like May, so end of the year. So you're talking like December time frame?
Yeah,
right?
I'm going to relocate sometime at the end of the year.
Okay.
Right. I'm not sure yet where I'm going, but Michigan's one of my options, like I said. So I'm coming back for my annual visit in May. And I was thinking about maybe just taking a drive around. I mean, I'm pretty limited in what I'm looking for.
All right.
What cities?
I lived
I'm
in
curious.
Michigan before, so sorry.
You've lived in Michigan before. So what area are you trying to hone in on? I mean, it's...
Well, I think Royal Oak's the only option because, I mean, if I go out, it's always downtown. And you can't live in Detroit because you can't insure a car. And there's that income tax in Detroit. So I think Royal Oak's really the only option if you're going to hang out in downtown.
Oh, we got a lot of
Yeah,
surrounding
Royal Oak is,
cities of Royal Oak.
Royal Oak is strong. Yeah, like I was just...
Royal Oak was really strong.
and they're often...
Well,
yeah.
But you can't buy a condo in Grosse Pointe, right? St. Clair Shores is too far, right?
Well,
Am I
yeah, it
wrong,
depends
or-
on what
I don't
you're...
know.
Yeah, no,
Yeah.
it just depends on where you're trying to locate.
I think you got to look. If you love Royal Oak and you want to go up and down
Yeah, it's
Woodward,
what
you
it's-
check it
it is
out.
what it
there's
is.
a lot of
Royal
places
Oak
up
it
and down
is.
Woodward. Yeah. So...
We're not
Make
going to
it
argue with
easy.
you.
Yeah.
I
But Tom,
think-
like I'll say this, like if it's end of the year, no, it's not too soon for you to start looking. I do think that depending on if you're going to be taking out a mortgage or you're paying cash or whatever that situation is, because the right house could pop up between now and then. And you could put in there like, you could give the current person like 60 days occupancy. Like you can do those things where it's going to push you out a little bit longer, because it would be a shame that, let's just say, if you did find the perfect home that you're looking for, would it break your heart if you found it tomorrow and you weren't ready to move on it? Or, do you just, close your eyes and you just wait till you're ready? It's that kind of thing. So I think that if you're in town and you really want to kind of hone in on like, yes, Royal Oak is the time and the place. And I think, yes, definitely take a look at it. But just a matter of if you're looking for a mortgage, I would get the financials in order now. And then you can look leisurely. And if the right one comes up, you're in that position to pull the trigger.
And to jump on that, Tom, while you're interviewing your loan officer, it's a great time to interview your agents.
Yeah, that's why it's no rush. You're not in this like pressurized situation. You're responding instead of reacting.
Yeah. Too many
So I should
people.
reach out to.
Go ahead, buddy.
So I should reach out to somebody while I'm there.
We're going to hook you up with these guys in the studio here.
Yeah, that'd be great. We'd
That's
love
a
to
fun
meet you.
thing. That's a really fun thing to do,
Absolutely.
obviously.
Tom, I have a question for you, Tom. It's 5:38 in L.A. Are you just getting up or are you just getting in?
I'm working. I work for a living.
I love it. That's
yeah,
right.
we
All
love
right.
it.
Yeah.
As do we. I love it. Good for you. Our kind of guy.
And we'll let
And I
the
got a
sport.
French tax return due next week, so I'm working with French people on
Sounds
that.
good.
right
Hey,
boy.
Tom,
Good.
Tom, we'll wrap you up, but a couple great things. Coming to Michigan now, of course, May and June, the houses are going to look a little prettier. I already put my mulch in, so that'll be a little bit better showing that if you come after the fall and all the leaves are gone. November, December is not a little gloomy. But Becky makes a great point. Perhaps you'll find a house and they're building a new construction, and
Yeah.
they need the confidence right now to know they've sold their house. And now we're moving forward and getting a transaction done, allowing them to stay there. And now they have confidence because they're building a new house, and they might not be ready to move, or that house might not be ready till later in the year.
Yeah,
so
I
those
feel like
things
that's
happen.
a huge, not a mistake, but like sometimes like what Tom was a perfect real life scenario is this is my timeline, but then they push it out to their 60 days before they're about to do it, and then
there's nothing
something
there.
happens or they're not finding the right house, and now they're in this like pressurized situation where maybe they're settling on something they wouldn't have otherwise bought because it wasn't what they're looking for wasn't happening, and now they don't have the time to facilitate that.
He sounds pretty organized
Yes,
to me.
yeah.
He wants to get his ducks in a row, get it all out there, and kind of do
Well,
his
and
homework.
it's not a bad thing, right? Like,
No, I think it's
he's
wonderful.
giving time, which sometimes those of us that are out in the field know we don't often have a lot of time, right? Our buyers we're looking now, we're going now.
Well, he's like he's a working
He's
man,
a working
right?
man. So he's ahead of schedule, which
Yeah.
is great. He's got time on his side, and yes, with this whole thing, we have guys that want to list. They won't list because they don't want to leave for 90 days. Well, I said list and offer. You need 90 days of occupancy.
Yeah.
There's people that will buy your house.
Yeah, that's a perfect example of that.
Yeah.
Yeah,
So
that was
that was a
perfect.
great question,
That was
Tom.
definitely
And
real life
honestly,
situ-
I would not wait. So
Yeah,
if
I
you
agree
do
with
come
you.
to Michigan, we look forward to meeting you.
There you go.
Like I said, welcome. You're coming to us.
And I'm going to say
Exactly.
that inventory will continuously grow here over the next 2 months, and we should see more inventory coming up in the marketplace.
Well,
but things
let's
can
hope so.
change.
In theory, it was supposed to already be pretty good now, like the way it was forecasting and looking at this time last year, it was kind of looking like things were starting
this
to.
This is like a true spring, old school Michigan market. I feel like it's like, it's been busy through like 365, but I feel like there's a little bit of a lag, and I feel like we're going to see that spring, summer market like really pop.
All right, keep it here on 97.1 The Ticket. It's the Hardcore Mortgage Real Estate and Business Show. We'll be back with all your calls, 248-539-9797. All right, welcome back to the show. We're going to take your calls on the Hardcore Mortgage Real Estate Business Show, 248-539-9797. Sports, follow us all day. We got Pistons basketball at 1 o'clock. Great stuff. Stoney and Brendan Shabbat, they're going to be following us.
Yep, they're out there getting warmed up right now. I see them in the bullpen.
Some Tiger baseball, I'm sure, later today. I know they're playing it. I just don't have the time. And that might
7
even follow.
o'clock. They're playing later tonight,
so
yes.
we'll be back on the radio here on 97.1. Keep it here all day long. This is the Hardcore Mortgage Real Estate Business Show. We move on to Dan in Milford. Good morning, Dan, and thanks for calling in. What's your question?
Good morning, guys. I've been tuning in, especially listening to the last caller, looking to buy closer to Royal Oak, Detroit, that area. I'm calling in about kind of the opposite end of Metro Detroit, more of, let's say, the outer range markets like my own in Milford, even Brighton, Lyon Township, Fenton, places where you can not only still buy some houses, but maybe even buy some land. How do you all feel that, I guess your takes on the prospects of new buyers, especially people looking to Metro Detroit, would that market be more, I guess, palatable for them with all the prices going up? Or does it still seem a little bit premature for people who are looking to, move into the region and relocate their lives in Metro Detroit?
Oh, great question, Dan. Thanks. But I would say that it's what you want, right? So if you want land, if you're looking for a bigger parcel of land and you want to build your home, it's always a great idea. There's a lot of builders locally. There's big builders. There's independent guys that do 1 or 2 a year. You can always, search for them. We have lists of people that we work with. Always a great option to build a home, obviously. And we said this earlier. Harvey, I think, said it earlier. Land is the future, right? So we don't get more of it. Yeah. So buying it is a great idea.
Yeah, especially in those areas. I wish I could agree with you.
It's like South Lyon, right? There was like, all of a sudden, it's just like it went from nothing, and then like South Lyon just exploded, right? So yeah, it's like
definitely built up.
It used to be land.
Yeah.
And now there's no land.
Yeah.
Wow. So when you want to build, there's a lot of land in Fenton. So if you buy in Fenton, one day Fenton will be
Well, if you go up and down 23, and you go 23, you've got Heartland. You've got Fenton.
Yep.
A little bit to the east, you've got Milford.
Yep.
A little bit to the west, you've got Howell.
Yep.
All right, even closer in, like you said, South Lyon. All those areas are phenomenal. If you want land, you a little bit more. You want to be a little bit more suburban out there. It used to be rural, but now it's not because it's all built up.
Yeah.
But I never think it's a bad idea if you're looking for space and you're looking to be. Now remember, you're out there, so it's all in proximity to where you're working and what's convenient for you. Schools are great, everything like that. So you take a look at it and you have to do what's convenient and what's best for you and your family. So not going to get an argument with me out there. I love it out there and a little bit familiar with it. So I think it's great. Milford, look at that, downtown Milford. How can you go wrong with downtown Milford?
It's hard to get a place accepted. Milford Village is one of those like Northville areas here where literally a house comes on the market, multiple bids. You got to be ready to go.
Got to be ready to go.
Yeah, it just naturally pushes you out. So if you're in the city and it's almost like people bought in the city as well, and they're like they wanted more land, they wanted space because everyone thought they weren't going to work anymore, right? And now they have to have to be maybe centrally located in a city, but like. You can never go wrong.
The COVID virus.
But you can't honestly, Dan. If building land is like the future and what you're thinking, I would never have a problem with that. It's just a matter of what is suiting your needs now in the future. But it's also sometimes it's hard to anticipate things. But if you already own the land and someone wants to come and buy it, well, now you're the seller.
Smart.
Dan, you get last talk on it. What do you got?
No, I agree with everything you guys are saying. I actually did buy some land and built what I hope to be my forever home out there in Milford, and it's amazing having the village right on the southern edge of the property and 6,000 acres of highland recreation area directly north. It's for me and my
beautiful
lifestyle,
area.
Dream come true. So it's just funny. You hear about people almost cannibalizing each other, trying to get into really saturated markets. So I'm always like, man, Milford, Brighton, Fenton, those areas, if you have the ability to buy land, do it now, because in 5 to 10 years, that land will be gone.
Sounds like you did the right thing at the right time. That's for sure.
All right, thanks for the call. Really appreciate that. I had a buddy do the same thing. And again, we always talk about the different areas in Southeast Michigan as we're all around we do loans everywhere in the state, everywhere in the country. But
I've heard that.
Had a buddy, thank you, Harry. We are everywhere.
Wow, that's nice.
I had a buddy by in 26 Mile, and whatever, it was 26 in Van Dyke, and it was years ago. Oh yeah, he's going to make some money when he flipped. I think he flipped it last year, actually. But sure enough, land is always a good way to go. But you got to know what you're doing. You got to get
I got
the professionals.
a buddy that had to have a Taco Bell close to his house or he wouldn't even buy it.
Some of the requirements, of course. Yeah, you want to
as
have.
we've gotten older, we don't need Taco Bell anymore. But
when I was younger, when I was looking for a house, it had to be near Taco Bell.
Oh, shit.
Your priorities are really good. I like that. That's a priority.
I'll never forget it. He looked me dead square in the eye and goes, if there's a Taco Bell close, I'm in. And I'm
good.
You're like, we're setting the barrier for entry is high.
Yeah.
Right.
Forget about the age of the roof. Forget about the furnace. I just need a Taco Bell to be close. That's it.
The fourth meal. Good stuff.
The request that a buyer will have is
after dinner.
Yeah.
All right, let's just dive in and throw in some refinance debt consolidation conversation real quick here. Yes, still a great opportunity. Again, we saw these rates are all over 7% over the last 3 years. The headlines were starting this year, mortgage rates at 3-year low. So we started refinancing all our clients. And we've been doing that for about the last 6 months. Again, everyone's got a different situation, Becky. Debt consolidation is totally in play. Run the numbers. It's all about cash flow. If you can better yourself now, and then the rates get better again next year, well, because we're a mortgage bank, we can handle that refinance for you really and save you a lot of money. And it's just a good way to fly. Get yourself consolidated now. Fix that cash flow.
Yeah, I mean, but at the same time, you got to be careful who you talk to, right? Because there are going to be individuals that will refinance you even when it doesn't benefit you. Ooh. So you have to really look at the math. You have to see what is best for you. Is it a home equity line of credit? Is it a cash out refinance where you just have one mortgage? But you can't just talk to anybody, because if you talk to enough people, someone is going to tell you what you want to hear.
Oh, of course.
But you need someone to tell you what you need to
Becky,
hear.
But Becky, they're not going to tell you they're going to charge you 3.5 points till you get that document, right?
I saw that one. We saw that one this week.
That one in there.
Look out.
Yeah,
Becky, tell that story. This is a great story.
Okay, so it's a longtime client of mine, and they were working with somebody, and someone suggested somebody else, right? So naturally, they come back home, right? And they said, hey, can you look at this? Someone suggested XYZ company. And at first, the first thing I saw was it was a 6.875 rate, and they were charging them 3.5 points. Now, these people are top tier credit. Okay, so I looked at that and I called her immediately. I go, did you happen to see, section A, line 1, where it says discount points? And she's like, it was $17,000. And I was like, I hope that you throw this away and you never even speak to anyone outside of me ever again. I was like, this is an abomination.
So
I haven't seen anything like this in a long time.
So Becky texts Harvey and I on it,
I was like,
and Lisa in our office, and said, are you kidding me? Look what's going on out there.
This is what's going on.
Because we get, we're on the street every day, and we hear these stories, and sometimes we have to see it in black and white to believe it.
And if someone, so generally though, if we can't beat or match it, we'll say go. I'll shake your hand, wish you well.
What's best for the client.
You can always come back home to me, and I'm going to be here waiting for you. But I just love the relationship that we have, and you said it too, Bob. These are lifetime clients. We've been in the business, or I've been personally. My business is 22 years. I mean, these guys surpass me, but we're referral based, and when you can work with someone, and then you work with your children, and then you're working with their moms and their dads and their cousins, brothers, sisters, and all that.
Occasionally they run away from home.
Yes,
and they do.
And then they regret it. And they regret
time.
it. They roll down their carry on down the driveway.
Yeah.
I'm leaving. I'm never coming back.
Yeah.
And they do come back because what's out there is scary.
Yeah.
It is scary out there. Why work with a stranger when you can work with someone that's going to treat you?
What'd your mom tell you, Becky?
Yeah.
Don't talk to strangers.
Don't talk to strangers. Don't work with strangers.
And how thick is a mortgage packet nowadays? When you're signing, I mean, they're not single documents
30
anymore.
signatures or more. Something
not
too bad.
It's not so bad, but a refinance.
I mean, you're getting into it for that reason. You know what I mean?
Yes.
That's the point. It's the relationship, and that sucks. I do. I'm with you on that 100%.
And I will say, I'll say this: when we get the privilege of speaking to a vast audience every single week, and when I'm out here, boots on the ground, talking to people, real estate agents, loan officers, consumers, it makes me realize we're not touching enough people, because people are still getting scammed. People are still questioning a 3.5 points on a 6.875. Or buyers are not understanding that there's down payment assistance programs out there. When some people say you guys talk about the same things. Well, you're not hearing us. There's not enough people that are connecting with it, because if we connect with one person each time, great, happy day. But there's a lot of people out there running around lost with pre-approvals that don't mean anything.
And we're chasing business, right? You would think the importance of owning your home, right? Probably one of the largest, if not the largest purchase. Second, you're going to take out a loan, which is 30 years commitment, right?
You could take less, but yes.
Let's just go on overall, right?
Yeah.
Say you're starting out, you're taking that 30, 15 year, whatever. And you wait for me to call you to look for a house. Hey, Mr. and Mrs. whatever, this is Bob from Max Broock. Would you like to do whatever? When we make cold calls looking for work, we're looking.
You're offering a free service at first.
Yeah.
Eventually you'll get paid, but they don't even have to pay because sellers still pay.
You would think it should be totally different. It would be there should be people just calling realtors left and right, asking questions about the most important thing in your life. And they don't. It's sometimes, for me, that's baffling.
Well,
and that comes down to it.
We all get those calls from our friends that used my wife's good friend became a realtor, and I just used her.
Yeah, it's saturated.
Help me get out of this situation.
Yeah.
Guys, that music says we're up against the end of the show here.
What?
It goes so
Oh,
fast.
thanks
Yeah,
for
we
having
get
us.
out
Do we
at
have to go?
8:57. We have to get off the air to syndicate across the country. Keep it here on 97.1 The Ticket. Of course, all day long, they got sports. Stoney and Brendan are coming up next. We
Thanks,
got that
guys, for
Pistons
coming
game
in.
at 1.
Appreciate it.
What a great
Thanks for
show.
having us. It was
Thank
a great
you.
time.
Bob Greenlaw and
Hope
Mike
we can come again.
Kaczmarczyk from Real Estate One / Max Broock in the Northville office. And always the great Becky Alley and Harry Glanz. I'm Harvey Freed. If you're thinking about getting a house, well, let's get that mortgage for you all set up. Give you that confidence. Call Capital Mortgage Funding 1-800-LOW-RATE, the best mortgage banker. We'll see you next Saturday here on the Hardcore Mortgage Show.